Give us 1 second, Facebook. We're logging on, just making sure everything is linked together. Hope everybody had a good work week.
No, just you can just break off a couple.
If you can hear us, please press 1. If you can hear us, please press 1. Good afternoon, everybody who's tuning in. We appreciate you tuning in with us.
Facebook, how y'all doing today? Happy Wednesday to everybody. Hopefully you guys are getting home safely, tuning in, getting dinner started.
Just trying to get these technical difficulties worked out. Good to go. All right, so today we're going over a few different topics, minor topics, pretty much talking about the top tips to purchase a vehicle with poor or less than perfect credit. We have a lot of clients who come to us on a daily basis. One of the basic necessities they need is to purchase a vehicle. Yes. So what we do is we pretty much normally go through the same process that we're going to go through with you guys today. Just let them know of the things that they can possibly do to put themselves in position to be able to purchase a vehicle. Okay?
Exactly. So
if you can hear us, please press 1 if you don't mind. Please press 1.
And so, Facebook, today we're going to come to you guys strictly about auto and credit. We'll be covering some myths. We're going to be debunking a few. We're going to be possibly even verifying or justifying a few. We're going to get into some auto insurance tips and a little bit about buying and leasing, right?
Yeah.
Some few tips.
All right. So getting into this, the first thing we want to talk about normally in this particular segment of buying a car, the biggest question we are normally asked is, should I lease or should I purchase my vehicle? All this is going to pretty much vary depending on what your particular scope for transportation is, how long you plan to keep the vehicle, what you use the vehicle for. So there are multiple different reasons why you might actually want to lease a vehicle versus purchasing, all right? One of the things that normally most people lease a vehicle because it's normally a lesser payment. They're normally able to buy more vehicle or a higher price vehicle with a lesser payment. The reason why is because you're not really financing the whole vehicle to purchase it. The lending institution is financing a portion of that vehicle, or they're holding ownership of a portion of that vehicle, and you're paying for the portion that you're actually leasing for that 2-year period, 3-year period, whatever the terms of your lease are. All right. One of the major discrepancies with leasing a vehicle is you have mileage restrictions. Most of our clients who have leased a vehicle who had some type of financial issue when it was time to turn in that lease was mainly because they went over the mileage. Whenever you purchase a lease, they give you X amount of mileage that you're supposed to actually drive in a year's time or in a few years' time. And if you exceed that amount, you're going to have to pay, sometimes it's 10 cents per mile, 15 cents per mile. It doesn't sound like a lot, but when you look at it for a duration of a few years, if you're going over this mileage, it can actually be a few $1,000s, and it could be the reason why you're upside down to actually trade in this vehicle. So with a lease, if you're over this mileage, you can go trade in this lease. You're upside down. When you're upside down, even though you're giving the vehicle back, you might owe because you've gone over the mileage. Or number two, the vehicle is not in the condition. It doesn't have the normal wear and tear, or what they consider normal wear and tear over the duration of your lease. And if that's the case, you're gonna owe them money, and that's not a good thing, all right? And that's where a lot of people kind of wind up jacking up their credit. Why? Because now they've turned in this vehicle. They owe money to turn in this vehicle. They say, you know what? I'm not gonna pay it. I'm just gonna hurry up and try to get a new car. They get a new car, and before you know it, a few months later, they have a collection or charge off. And it can even be treated as a repossession, even though the vehicle wasn't repossessed. Why? Because you didn't uphold the contractual agreement when you purchased that vehicle. And because of that, it could show on your credit report as a collection or charge off, or possibly a voluntary or involuntary repossession. And while we're on it real quick, there's no difference really between a voluntary and involuntary repossession. They both are a broken agreement or a broken relationship. All right. So that's my little 2 cents about leasing versus buying a vehicle. But if you do have any questions with that, please put that in the questions section. We have Dan, he's narrating. He'll gladly answer any of those questions or get those questions over to us, and we'll gladly answer them for you, all right? So the next...
But before you get on, real quick, let's do a sound check. Press 1 if you can hear us. Press 2 if you cannot hear us, if that makes sense.
Share this video, please. Share this video. Everybody's at one time or a point is going to purchase a vehicle. So some of the tips that we're giving you today could be quite vital to help you save money or help your loved ones save money in the long term. Please do not be selfish. Tag 5 people. Share this with 5 people. We would greatly appreciate it.
And not only that, just to expand on that, also for people that actually already have an auto loan, if you're looking to refinance possibly, and you don't know how, this video will tell you, we'll get into that. Video will cover that. So please share it or even tune in just for that aspect as well. All right?
All right. Before we get into the credit aspect of purchasing the vehicle, real quick. When you purchase a vehicle, everybody needs to have auto insurance, okay? A lot of times we're purchasing insurance and we have no idea what we're purchasing or what we're doing. We're just getting this insurance. Why? Because normally it's a requirement of our state, or normally it's a requirement of your actual lender who you're actually getting this vehicle through. So I'm just going to briefly break down some of the types of insurances that are needed to purchase a vehicle. The first one's going to be collision insurance, all right? Collision insurance protects you in the event of a collision or accident to your own vehicle. A lot of times people don't understand when you have insurance, if you don't have collision coverage, when you wreck your own vehicle, it might not cover the actual repairs of your own vehicle. So it's something you might want to look into. And normally, collision insurance is kind of considered an additive, an add-on. Depending on what state you're in, I can't speak for all states. It might not necessarily be a requirement, but something that additional that you can add on for additional coverage and protection.
And that's just really just depending on your loan. If you're financing or leasing, if you're financing or leasing and you're paying that payment, yes, you may have to think about these additives because ultimately it's there to protect you. But if the loan is maybe a small loan or you've already paid it off, or the car is already paid off, maybe that's something that you don't necessarily need. So it's really all depending on your situation. So
that's a good point. Yeah, if the vehicle is paid off, you might not necessarily you might possibly cut that corner. However, if your vehicle is paid off, let's say I have a $10,000 car and I don't have collision insurance and I wreck my vehicle, now I'm out of $10,000 if I don't have any, if I don't own anything on that vehicle. So, and even though you might not have a loan or you might not own anything, you still might want to still, protect your equity.
At least look into it.
At least look to it. Good comment. All right. Property damage is going to be, so you have collision insurance, we have property damage. Property damage is normally one of the required insurances, and this is the insurance that covers the property damage to other people's property that you caused from an accident. So normally when you have an accident, I run into Trevor's vehicle, my property damage coverage covers paying for Trevor's vehicle. All right. The other type is going to be bodily injury. Bodily injury covers my own bodily related injuries, my loss from work, and also child care expenses. That's very big. A lot of times with accidents, we only think of the actual trauma of the accident. We don't look at the backdrop. What happens when you got to go through therapy, you got to do all these sessions, and it can be a mess. It can be a mess. All right.
And you're missing time from work, so that's another.
Missing time from work, child care expenses. You know, all these things can be very, very. I know some child care expenses are more than car payment.
Exactly.
All right.
And
So
that's per child.
all right. So it can be a big deal. And the last one's going to be bodily injury. Most coverages or most states require you to have bodily injury, and this covers, usually, which is the most expensive part of the accident is the either the loss of life or the injury of the body. So you want to be most definitely having these coverages, and we just want to kind of touch on this. Why? Because we care. Because we have a lot of clients come in asking us about, okay, I got this insurance. Why do I have it, or do I need it, or how can I go about getting the cheapest insurance possible? So depending on your scope, what you're trying to do is going to determine what type of insurance you need. All right.
And that's a good point. Keep in mind, we're a credit repair company, and we're here talking about auto insurance. So ultimately, again, this is something that we've noticed our clients have been experiencing. So we just wanted to see how we can help, spread the right word about it.
Right. And if you guys have any questions, please put them in the comment sections so we can get those questions answered before we get out of here. All right. All right. So we're getting into the credit tips of actually buying a car with bad credit. Buying a car is one of the most, it's probably one of the most second essential things you can do, especially down here in Florida, because our transportation system is not the most adequate. And getting from one side of town to the other, you most definitely need a vehicle. All right. So it's very important to kind of understand the tips and tools, and this is just not for people with bad credit. Some of the things that we're going to be going over are just even the tips and tools of what you need to understand. You understand? Just to even purchase a vehicle, even with good credit. All right. So anybody who's trying to purchase a car, anybody who's trying to purchase a vehicle, the first thing you need to do is work on your credit before shopping for a vehicle. All right. Just if I was getting ready to prepare for a marathon, or I was getting prepared for a test, I would prep and condition myself. I would just not walk in coldly, just trying to, figure this process out on a whim at the last moment. You understand? So always do your due diligence. Try to figure out, what's going on with your credit. Do you have collections out there? And keep in mind, they're going to be looking at your behavior, not just right now, but they're going to look at your total credit behavior. How have you been handling your credit report since the first time you've actually had access to money? All right. Anything with that?
No, that's covered it all.
All right. The next topic is avoid additional bad credit items. Which means if you're in the hunt to buy a house, you want to buy a car. But if you want to hunt to buy a house, buy a car, you want to make sure that you put yourself in position not to keep having negative things reporting on your credit report as you're ramping up to go, purchase that vehicle, to be approved for it, and so on. All right. Minor little things such as late payments on a collection account can wind up dinging your credit score, causing you to possibly pay $30, $40 more per month on the same vehicle, all because you had a little collection account pop up on your credit report. All right. The next thing you necessarily want to do is you want to check the going rates for auto loans before you actually purchase the vehicle. Why do you think you want to do that, Trev?
Well, no, you want to make sure that you know exactly what what it takes to get an A in a short term. You want to make sure that you're not being beat out of your money. So knowing what the interest rate, what you're getting into, is very important in that aspect. But also knowing what you can go to another dealership and expect. Because ultimately, the biggest thing is you want to shop yourself around. You want to make sure that you don't just go to one place and just settle for what that company is offering, even if it's the same type of car. Even if you go to Nissan A and go to Nissan D, again, you want to make sure you know exactly what a fair interest rate would be.
Right, which is good, because keep in mind, if I go to a car dealer and I have banged up credit, I can't expect premium financing. I can't expect to get creme of the creme interest rates. So you have to kind of understand exactly where interest rates are sitting, kind of speculate where your credit sits on the chart. Are you an A credit profile? Are you a C credit profile? Are you an F credit profile? Based off that, they're going to add on to what is normally the best interest rate based off of the higher the risk and them loaning me the money, most likely the higher the interest rate is going to be for me.
And also keep in mind the actual interest rates themselves are really kind of categorized as far as people being A credit. You have a loan for A credit people. You have a loan groupings for
prime, subprime.
Subprime. That's what I was trying to say.
Specialty financing.
Right. Exactly.
So when you have these type of segments, that actually kind of groups you where you are from a credit scoring standpoint. Even though you might have rough credit, when you look at the average rates, you should not be paying double the average rate though. All right. There should be the average rate based off where you're sitting, is 8%, 9% based off of where your credit sits. You should not be paying 16%. You should not be paying 18%. So there's going to be some due diligence. You also have to kind of understand what you're getting yourself into, because not all car dealers are respectful. They all don't respect you from a financial standpoint, and some of them are looking to bamboozle you and take over. All right?
So know your interest rate before you go.
All right. There's a question.
We got a question from Jose. He wants to know, can we work with people outside of Miami?
Most definitely, Jose. Good question. We most definitely help people outside of Miami. We have clients in multiple states who we can gladly assist. If you do have any questions or concerns, please feel free to inbox us, and one of our team members will get back to you as soon as possible. All right?
All right. Thank you, Jose.
All right. So your credit history will also affect what type of car you can get. However, the down payment will also affect what type of financing or what type of vehicle you can get. Why does the down payment play a factor? Most lenders would rather you put a down payment on a vehicle. Why? Because now you have some skin in the game. Now, if I buy a car from Trevor and I don't put any money down, the chances of me defaulting on that vehicle are very high. Why? Because I didn't really put anything out of pocket to be able to purchase that vehicle. Scenario B, I buy a car from Trevor. However, this time I put $2,500 down. I put down 25%. With me putting down 25%, Trevor, as the lender, feels a lot more comfortable. Why? Because now I have skin in the game, and he knows the chances of Andre going in default are going to be very, very rare. Why? Because Andre's going to try to do everything he can not to just walk away from his $2,500. Okay? So keep in mind, even if you're buying a car and they're telling you you're approved for no money down, and you did have money to put towards that vehicle, you might want to ask them, well, if I put down X amount, how would it change my payment?
Good point. Good point.
Would it fluctuate the payment? How's it going to affect the payment? Sometimes you might look at that dollar amount and it might not be it might not be worth it, or it might not be substantial. However, there's been cases where we have looked at that and we've realized, hey, by putting a few dollars down, and keep in mind, some programs, by putting more money down, they will even drop your interest rate even more. Why? Because the more money you're putting down on the vehicle, the less amount you're financing, and the less amount you're financing, the less risk the bank is taking. Therefore, they passed on that reduction of risk to you by giving you a reduction of interest rate. Okay? So putting a bigger down payment could most definitely help. And another thing while I'm thinking about it, a lot of times if you go look at a vehicle, let's say hypothetically, just the average $25,000, and I'm only giving the scenarios for what we deal with down here in Florida, okay, or in the Florida region. The average if I have a client who's looking at a $25,000 vehicle, remember that $25,000 vehicle is just the sales price. That doesn't include tax, tag, and title. So on your average $25,000 vehicle, you're going to add anywhere between $1,500 to $2,000 just for tax, tag, and title. All right. So if I'm buying that $25,000 vehicle and I'm not putting any money down, I'm probably going to, when it's all said and done, be financing somewhere about $27,000. Why? Because they're going to add that tax, tag, and title on the back end of the loan or the top of the loan. Therefore, it's going to inflate the amount that I'm actually borrowing over time. All right.
All right, so let me do this real quick. Press 1 if you are learning a lot now. If you just picked up a few pointers that can help you along the way, that is helping you. Please press 1. We just want to make sure that we providing good information and not just fluff. All right.
All right. Good stuff. All right. Next thing, very important. This is where another piece of the puzzle where a lot of people get in trouble. Knowing what you can afford to pay prior to even walking on that lot. All right. Keep in mind, the car salesman is there to bait you, gas you up, inflate you, do everything they can do to help you upgrade or to purchase a higher priced vehicle. Why? Because that's how they revenue. That's how they make their money. So keep in mind, very rarely are you going to a car lot where the dealer is saying, you know what, buy the most economical car. They might tell you some of the bells and whistles and the features of two of the vehicles that you're contemplating. Be careful. Even some of the tactics with car dealers. The car dealer will actually, if let's say I call Trevor. I'm going to the car dealer, right? And when I go to the car dealer, I say, hey, you know, I'm interested in this 2017 Chevy. Okay. Trevor, he's the salesman. When I go to the lot, what does he do? He's going to bring the car that I want, the 2017 Chevy. He's going to park it right up front, all right, for me. And what he's going to do is he's going to make me feel hella special when he's showing me that vehicle. And what they're doing is they're trying to break down that resistance of you possibly saying no. All my salesman friends out there, I'm not knocking you guys. You understand? However, I just got to show the other side of the game, all right? So they might bring that vehicle up there. They might have that. They might say, you know, I've even seen where even some car dealerships where they might have, you know, guest parking here. They might have the guest parking there, but they're going to have the vehicle that you want to purchase right next to that vehicle. Why? So you can look at your old jalopy and then see this whole brand new vehicle that you can possibly be able to put yourself in. And again, psychologically, it makes you say, you know what? I do not want to get back into this car. They play actually psychological word games. The finance manager, you might be in there doing your finance. The finance manager might tell you congratulations before you even got financing. Why? Because they're trying to tell you psychologically, you got this car. And what they're doing is they're telling you at whatever cost it takes, congratulations because you're going to take this vehicle. All right? And all this is just really psychologically just wearing you down to say, you know what, or to be embarrassed after somebody told you congratulations for this vehicle, to be too embarrassed to say, you know what, I can't afford it. I can't tell you how many clients who we've somewhat mentored who went and bought a vehicle after the fact and said, you know what, I'm paying more for this vehicle than I want. Or another sales trick, they will actually tell you you have been approved for the vehicle, right? Congratulations. And then 15 minutes later, they might have acted like they didn't act, and they're going to tell you one price. So let's say Trevor tells me I've been approved for a vehicle. He tells me my monthly payment is $400. Then 20 minutes later, he says, oh, I forgot to put the correct amount for your down payment. All right? Your down payment should have been, you know, $2,000. I didn't put it in, so now your payment's going to be not $400. It's going to be $440 a month. All right? So these are just little things that wind up happening to kind of wind up really just changing your psychological scope to continue with this process, even though you're not comfortable with it. All right? Cool.
Okay.
Did I miss anything with that? Did I
No,
go too in depth with that?
No, you did good with that one.
Okay, all right.
All right, so where are we? Number 6.
Yes. The next thing I most definitely suggest, this is anybody, I don't care what your credit level is.
I actually learned a lot about this one.
All right.
Over the past couple of years.
All right. You want to always go into the car dealer pre-approved somehow, some way. All right.
Absolutely.
When we're talking about pre-approval, normally, in my opinion, all right, the first person you want to try to get pre-approved from, if you're part of one, is your credit union. All right. Credit unions normally have more aggressive interest rates for your benefit because they normally have some type of rapport or relationship with an employer. That's normally you have to be vetted through a credit union, either through family members or through employment. So if you're vetted in, they feel that, hey, you know what, if you don't pay, they kind of have you between a rock and a hard place. Why? Because, you know, they have access to your employer, and nobody wants their employer to know that they can't pay their car note, or they have access to your family members or friends who vetted you in, saying, hey, you know what, you let Andre and Trevor through this credit union, and he's not making his payments. Could you please, you know, talk to him or holler at him, or it could possibly affect your account, and so on. Blah, blah, blah. I'm just throwing that out there, all right? So You always want to be pre-approved. And the pre-approval serves a few purposes. Number one, it lets you go to the car dealership and go to the lot and start talking cash prices. Because normally any dealer, they're going to want to start talking the finance game with you. Why? Because there are multiple ways a car dealer can make money. They can make money not only off of the vehicle itself, but they can also make money off of the interest rate, because the bank will give them a kickback. For example, let's say I get approved for a loan based off of my credit score, and the bank, Trevor is the auto dealer, and the bank tells Trevor, Andre got approved for 6%. But Trevor comes back to me and says, Andre, you know what? I got your approval back. I got good news. You got approved for 7%. Trevor just sold me a 1% higher, but what did he say before that? He got good news. He didn't tell me that the bank really gave me an interest rate of 6%. He told me they gave me a rate of 7%. And what does the bank do? Because the bank is now making more money over the life of the loan by selling me that, by giving me that 7% versus that 6%, they're going to give the car dealer a kickback and give him a few $100s just for selling me a higher interest rate. All right? And keep in mind, this process doesn't only take place in the auto industry, it also takes place in the mortgage industry. Your broker, your lender can tell you, hey, you know what, you got approved for 6%, when the bank really could approve you for 5% or 5.25%, and that lender or that broker is going to make additional funds by selling you a higher interest rate. Okay, so you want to keep that in mind. It can be very big. All right. So the first reason why you're getting pre-approved is, number one, you can go in and you can talk a cash price with the dealer. You can tell the dealer, hey, I'm pre-approved. I'm cutting you a check. What's the least amount you can get me this vehicle for? All right. If I'm not pre-approved, I'm gonna go to the dealer. I'm gonna say I want to buy this car. He's gonna say, well, what's your credit score? Well, I need to see your income. I need to run your credit report. I'm gonna have to sit in front of the finance manager for 30, 40 minutes. They're gonna be running these numbers. I'm gonna be sitting there feeling nervous. And they're going to be looking at the car, all the cars in the showroom, and be like, man, I want a car so bad. And keep in mind, the longer they have you sit, the more desperate you are possibly to go ahead and purchase that.
It plays on your psyche.
It plays on your psyche. Why? Because you don't want to leave that car lot and go sit at another car lot for another 2 or 3 hours because you know your credit's banged up. All right? So it's all part of wearing you down. That's the reason why I want you to be pre-approved, so you can go in talking cash prices. And then the other ultimate thing is, just because you're pre-approved doesn't mean you have to go in with, doesn't mean you have to buy the car with the pre-approved offer. What I'm trying to say is you're pre-approved. Like for example, when I bought my vehicle, I was pre-approved with a credit union. I won't say the name because I don't want to insult them, because they are actually very good to me in every other aspect, and other than this car loan. All right. This particular credit union, they gave me an interest rate on my vehicle. I was purchasing a used vehicle. They gave me an interest rate, a pre-owned certified vehicle. They gave me an interest rate of 3.5%, which when I got the pre-approval, to be honest with you, I was quite satisfied with it. However, when I got to the dealer and I was getting ready to purchase my vehicle, I put the dealer between a rock and a hard place. They were looking at my interest rate and they're looking at my loan. They're saying, hey, would you want to do business with us? You know, or would you like us to take a look at it and see if we can beat this credit union's deal? And at first, to be honest with you, I was kind of hesitant. I really didn't want it to take place. But I told them the criteria. If you can beat this by anywhere between 0.5 point to a point, I will gladly do my financing with you guys and forgive on the financing with the credit union. Long story short, I sat there for probably about 20 minutes. They came back and they actually gave me an interest rate of 2.5%. They actually beat the interest rate by a whole point, which knocked down my auto payments. I think it was about like $38. $38 doesn't sound like a lot of money, but over the life of the loan of me having that vehicle, I believe it equated to somewhere around about $7,000 that I would have paid in additional, 38, 12. I'm sorry, it would have been somewhere about $3,000, $3,000 to $4,000 that I would have paid in additional interest just by having a higher payment, just by 1 point. And keep in mind, 3.5% is not a bad interest rate. All right, it's not a bad interest rate. However, it put them between a rock and a hard place to give them something to beat. Now keep in mind, what if I would have went into that actual car dealer and I never would have been pre-approved? Do you think they would have given me a 2.5% interest rate? No, he would have came to me and says, "Congratulations, Mr. Coakley. I got great news for you. We got you approved at 5.5%. You want to drive the vehicle now?" And that's how it winds up going. So you just want to be careful, all right? So there's two reasons why you want to be pre-approved. Number one, it lets you talk a cash price. Number two, it gives the dealer or the lender or the financial institution something to beat. It's like, I ain't gonna even say that analogy. Don't worry about it. All right. Next one. All right. Next one. If you have banged up credit or your credit's not up to par, one of the things you want to do is you want to skip all the added extra items on your vehicle. All right.
That's right. So then you're talking about your leather seats, your sunroofs, your premium speakers, your spoiler kits, all of the floor mats, all of those extras that make your car look like it's all yours.
And keep in mind, it's all the little extras that make the value of what that makes
That drives it up.
that drives the value of the car. Because think of the base model car, right? Think of a base model car, and think of the top end level of that same car. It could be a difference of a $15,000 swing just of the same vehicle, but this one has a bigger motor, this one has spoilers, this one has leather seats, this one has power windows, this one has, power seats. So all these other additives, they're stacking on. So you need to choose your poison, long story short. Every extra might not be able to suit your financial goal, all right? So be a little bit selective and choosy with how you actually wind up, picking those extras.
And that goes back to number 5. Just simply know what you can pay and just stay within that realm. Don't try to divvy off of that.
Exactly. The next one,
I didn't know this one.
which is kind of, it depends on where you're at. There are nonprofits out there that help individuals with low income, but they're very few and far between. But I would tell you to do any research you can to see if there are any incentives for, being low income, being at risk. I know there are utility companies just for being low income. They give you discounts and prorations on bills. So this is something that's out there, but I'm not going to tell you to lean on this one too much, all right? There are nonprofit organizations out there that will help you with financing your vehicle if you're low income, but they are few and far between, all right?
Just make sure, just check your state and see if it's available in your state. That's the best thing we can tell you.
Exactly. And the next thing we would most definitely recommend is you want to stay away from buy here, pay here dealers, all right? And I'm not necessarily knocking the buy here, pay. Okay, wait, let me back up. Depending on your financial circumstance, you might want to deal with a buy here, pay here dealer. I've had some clients where, depending on what they were doing and what their scope was, I might have suggested a buy here, pay here dealer. And it's mainly because of the financial situation they're in at that time, or the critical situation that their credit is in. For example, a client was getting ready to buy a house. She was in contract, new construction. The house was getting ready to close 6 months out. However, she wrecked her car and most definitely needed a car, but she had the car that she had was paid for. She wrecked the car, didn't have insurance on it, going back to insurance. So now she's in a position where she has to go to work because she's getting ready to buy a house, but because her debt ratio is very tight, she can't afford a car payment on her credit report because it's going to knock her out of whack. In that particular case, I suggested her either try to buy a cash car or possibly go to a buy here, pay here place. Why? Because a buy here, pay here car dealer, number one, is most likely not going to report it on your credit report. Most likely, let me say that. Most likely. There are some buy here, pay here dealers that do report on your credit reports, and you just want to be careful with that, all right? Most of the times when you're dealing with a buy here, pay here dealer, you're most likely possibly going to pay overpriced for a vehicle. Why? Because they're taxing you on the vehicle, or they're actually, marking up the vehicle. Why? Because you don't have the income, you don't have verifiable income. Number one, you go to buy here, pay here dealer for 2 reasons. Number one, you have verifiable income. Number two, your credit is jacked up. All right? So they know you need them at that particular point. That's the reason why you're on their lot. So a lot of times, even though the financing might not be structured like a lender, however, how they structure the financing, you could be paying just twice as much, or you could be paying twice as high rates if versus you going through some type of financial institution. All right. Anything you want to add with that?
No, you got that one.
All right. This is very big. All right. The last one. Read all your paperwork. Very important. Because keep in mind that goes back to the story, right? All right. I'm buying a car from Trevor's car dealership. I've been sitting in his waiting room for 2.5 hours while they're doing all the financing mess, and they finally say, "Okay, you're approved," and they verbally told me an amount that I feel I can afford. All right. Now that they verbally told me this amount, what do? I just go to signing papers. Why? Because I feel they wouldn't lie to me. They're a reputable company and all this jazz. To be honest with you, everything that salesman says out of his mouth or that finance manager is out of his mouth is not worth anything. The true documentation is everything that's going to be in that agreement or that sales contract or that purchase agreement or that leasing agreement, whatever it may be. All the terms are going to be there. All right. So you want to be very careful with that. You don't want them to tell you or verbally tell you you're getting a mortgage or a loan. I mean, a mortgage. You're financing your vehicle for 3 years when you really got a 4-year loan. All right? Which I can't tell you how many times I've had clients tell me, "Oh, the salesman told me it was for 4 years." And I'm looking at the credit report and it's a 6-year auto loan. Why? Because they didn't really do the math. They didn't see the 72. They didn't do the math when on the terms of the actual contract it said 72 months. It didn't say 6 years, but if you would have did the math on those 72 months, you would have known it was 6 years. So it's not purposely done like that, but it's purposely done like that by design also. All right? They're trying to make it as sketchy as possible. And I'm not trying to say all car dealers are trying to get over. That's the last thing I'm trying to say. However, I'm trying to say you need to do all your due diligence to make sure that you're doing everything you can to protect not only your finances, but your investment. All right?
It has to be said. If it's not said, then people don't know that it exists, and so now you have more people just continuously being scammed. Mm-hmm. So, also you want to make sure that the terms that you agree to before you leave that lot with that car, make sure you sign that loan, because ultimately you want to make sure you're not being scammed in that regard, where they're changing the rates on you or anything like that. So
right.
I'm sorry, I should have been saying that to the camera, not you. But yes, you just want to make sure that you sign the all your paperwork and not leave anything to be signed later, because ultimately that is also how terms and things get changed. So.
Does anybody have any questions? Please throw up your questions so when we sign off, we can kind of get any questions or concerns. We're up here giving you all this information, but I want to make sure that we get you the information that you need in order to be able to purchase the vehicle on time. All right, so back to what Trevor was saying. There's another thing. A lot of car dealers will also be slick, right? They will tell you, okay, they'll put you through the whole financing waiting game. You might be at the lot for 2 or 3 hours. They say, you know what? We're still waiting to try to get financing. What we're going to do is we're going to shop you around from lenders. But here you go. Here's the car. Take the car home for a few days, and when we get the financing straightened out, we'll let you know. If you do that, you're the biggest fool. All right? Let me say that one more time. If you do that, you're the biggest fool. Why? Because now they're putting you in position to acquire something that you don't even know the true payments for. And guess what you're going to do? You're going to get that new car, and what you're going to do? You're going to be on Facebook.
Drive around.
You're going to be on social media. You're going to show all your fans and family members. You're going to do all these great things. And then all of a sudden, 3 days later, the car dealer's going to call you back and says, you know what? Your payment is $100 more than what we originally quoted you because we couldn't find financing for you. Keep in mind, they let you drive the car off the lot. Why? Because they want to lure you in a little bit deeper. They want you to throw that car on social media.
Feel comfortable.
Feel comfortable. Because the last thing you want to do, or the last thing the average person is going to do is, go back on social media and say, you know what? I made a mistake, y'all. It's really not,
I would lie.
I ain't qualified for this vehicle. Y'all know my credit was jacked up. Y'all should have known. It doesn't work that way, all right? So, believe me, the last thing I ever want you to do is drive that vehicle off the lot and you have not secured your financing. I can't tell you the countless people who have come back to me and said, you know what? They said my car payment went up $50, $100, this and that. I'm like, well, Did you confirm that before? Well, they told me they was gonna get they was gonna find a lender for me while I took the car home. All right, keep in mind, they gotta find a lender for, that's like me saying I'm trying to find a wife before I get married. I gotta have a wife to get married. I can't be talking about wedding and I don't have a wife. So there's a process. There's a process, what I'm trying to say. All right. Any questions or concerns? Anything?
Any questions, Dan?
All right, cool. We appreciate you guys. We're gonna be out here every other Wednesday, giving you guys tips and tools of things you can do to repair your credit, restructure your finance. Even though we're a credit repair company, we care about your finances. All right, I care about finances. So many things are attributed to your credit, but it's not just all your credit. How you view money, how you psychologically think about money. I have clients who, who are literally make minimum wage, but have, a few $100,000 in access to credit. And, income doesn't always, affect how much access to credit you have. So, there's always something you can do to help maximize your finances, whether it's through credit repair, whether it's through shopping for cheaper insurance, whether it's for, finding a second job to actually kind of create your more revenue or create more income to be able to pay your bills for a better quality of life. And that's what we want to do. Y'all probably haven't heard it, but I love y'all. I love you. And I'm only saying it because I'm sitting here for an hour, spending my time with you guys, and we just appreciate what you guys do. There would be no us without you guys. Any questions? Are we out? We good? Anything? Well, we're going to sign off Facebook. We appreciate your time. If there's anything that you guys need, please feel free to inbox. Even though this video is over, please share it. Tag 5 people. We're blessing you. You can bless me by getting this out. I might not be able to touch 1 million people, but I can touch 1,000 people, can touch 1,000 people. All right?
Absolutely.
So,
and not only that, I'm gonna also invite y'all to go back and watch this again. Maybe you jumped in midway through, or maybe you just catching the last 5 minutes here. So we covered a lot of good information. Go back and watch it again. So don't just share it. Go back and watch it again. Maybe take some notes, and maybe hopefully you'll give us a testimonial maybe next time we're on, and let us know how your car buying experience went with the information we left with you today.
all right.
How about that?
Cool. All right, guys, we appreciate your time. Anything we can do for you, please reach out. We love you. Peace.
Love you.